All right, hello everybody. We've been waiting for this moment. I made a live stream just kind of like prefacing this moment. I've been in contact with this individual. This guy has been one of the major contributors to the channel, and I consider him a friend because his contribution has not only helped me and scale the YouTube channel to another level and actually kind of like bump the business credit that we talk about a little higher, but he's been actually a friend. We've been in contact constantly, and I'm really honored to have him today in the channel. Charles, thank you so much, man. I appreciate you being here.
Thank you, Wilber. Thank you so much. Hello, everyone. Welcome. I really do appreciate it. Before I get started, I just want to give background history on myself, what I've done, successes I've had, and some of the lessons I've learned. Started out basically was repairing repairing personal credit. That started back in 2002, 2003. It came out of personal need. I knew nothing about credit. I needed a new car. And I remember going to the Honda dealership because I wanted a new Honda Accord. It was a beautiful one, it was aqua blue. And I was ready to go for it. I was in sales, so I was making great money. And I got to the dealership. They're like, great. You said, here's the application, we'll call you. I said, great. And so I was so happy because they said you just put down like $500 for this, your brand new vehicle. Well, they called me back up and they were kind of angry. And they said to me, you have horrible credit. And I was embarrassed because I had good money. And I said, what do you mean it's horrible? They sent me over my credit report and it was just horrible. They said it was horrible. And so I said, oh boy. So I pulled my credit reports, Experian, Equifax, and TransUnion, and looked at it. And I looked at what they had talked about, and it was pretty bad, but I didn't know what to do about it. So I went online and I tried looking up credit repair. And a lot of the time, the gurus back in 2002, they were like offering like, $2,000, $3,000 repair your credit report. I was like, this is crazy. And so I always believe in guerrilla tactics. Guerrilla tactics means not looking at what's normal, a normal paradigm, but looking outside the paradigm and saying, okay, what's possible? I don't care. Let's get it done. So I found this lady, her name was Christy. She was a engineer, but she also became a mortgage service person. And then she specialized in credit repair. And so I was talking to her. She goes, well, Charles, just send your information over and we'll look at it. So I sent it over to her and she goes, oh, okay, I can charge you $45 and you can get all these removed. I said, really, $45? I said, yeah. And I said, okay. So she sent it over to me and she sent the letters out and they got removed. And I was so amazed, like, how did you do that? And she told me a little bit, and that started me on my path. Well, when that happened, it lit a fire into me. So I started telling my friends and my family that what I could do credit repair now, not knowing everything I know now, but I had what I knew. So I had some success there and started doing really good. Well, at the time, I was working at AT&T Media Services, and I saw an ad for $300,000 in lines of credit for only $10,000. So I said, oh boy, it was a Nevada corporation. So I said, oh boy, I need this to start my own business. I sent the $10,000 in and I had called the references, everything else, waited 8 months, called again. They said, don't worry, Charles is coming. After 8 months, never received anything. Went online to find out about the company. Found out that they had opened up an FBI investigation against the company because they were selling things fraudulently across state lines, which is a federal offense. Contact the FBI in Minnesota. They put me in contact with an officer in Long Beach, California, because I lived in Los Angeles at the time. And they said, Mr. White, you'll never receive your money again. So when that happened, I said, okay, when life gives you lemons, I believe in making lemonade, which means making the best of the situation. So I said to myself, I have to find out how credit works every single bit. I'm a smart guy. My background, I didn't tell you this before, my background is in physics, and I have to know. So I told my friend about this. His name was James Persley. And every single day for a year, every single day, including Sundays, we would try to figure out how credit works. This means calling MasterCard, Visa, American Express, getting copies of best business practices from Visa, calling Visa Corporation, talking to their employees, going to university, getting white papers on how credit works, looking at the structure of credit from the Federal Reserve to Basel, which is a regulatory body over central banks around the world, understanding the Basel Accord, understanding the 3 pillars of Basel, understanding securitization, how they sell it, understanding FICO, what is fair housing company, what's their background history, understanding Dun & Bradstreet, understanding Experian and their connection to the Bank of England, and on and on and on and on. Just to see how it works. So after we did all that, now it's time to have guinea pigs. And so we called up some companies around the country that I knew and he knew and said, hey, we like to build your credit. We can build it to like $200,000-$300,000. They're like, sure. And so we did in a short period of time. They're like, how'd you guys do this? Well, at the time, we knew how it was done, but I was getting so stressed out because of how other things were happening in my life. James went on, his company does between 20 to $40 billion. He built it on credit because there are secrets that are credit that most people don't know about, but we had found out about. And at the time, I decided to move back from Los Angeles back to Portland, Oregon. I started a company called Corporate Credit Builders. And what Corporate Credit Builders does is that we help small businesses get lines of credit. So I did that for about 8 years. I also worked with the state of Oregon, the Oregon Small Business Fair, which I was one of the speakers. That means I talked to like tens and hundreds of people about credit, how it works, how to structure it, everything else. And at the same time, I had clients, and my best client has done over $1 million plus, actually a couple over $1 million plus worth of lines of credit. I understand how it works. And I feel, and I believe I'm one of the best in the nation on how it's done because I've been doing it for so long. I've asked the hard questions. I know who to contact. I sat down with bankers vice presidents of banks, understanding my credit. And it's really funny because I'll ask them questions they don't even know. And I was like, well, don't you know this? You're a banker. They're like, oh, no, because that banker knows his bank. They don't know other banks. So like one of my friends was the vice president at Bank of America. She knew Bank of America, but she didn't know Wells Fargo. Well, I know my other friend who was at Wells Fargo. He didn't know Key Bank, and Key Bank doesn't know, U.S. Bank. U.S. Bank doesn't know like Regions Bank or, Chase, those type of things. However, they still have the same kind of platform. Well, during this whole period, I started finding out secrets that most people don't know. I'm not going to show secrets now, but you start finding things out. You're like, wow, why don't most people know this? But in my classes and in my trainings, I always try to stay with the simple that most people understand, because once you get into it, it's like there's a door that opens up and you start asking more questions. And I always tell my clients, you can never ask enough questions, because usually I only give out maybe like 25, 50% of the information I know. And the reason why is that most people don't ask questions. And then I ask them a question, and that question leads to another question, and that helps them, get financing for the corporation. So today, what I want to do, I've been watching a lot of videos online, and I've been laughing at a lot of these videos because you see the net 30 credit and everything else, which is okay. But as I was telling Wilbur earlier, there are hundreds and hundreds and hundreds of companies that will give you lines of credit. For example, Wilbur, I'm going to digress a little bit. So let's say that you have a restaurant, or let's say you have a coffee shop, which is really big here in Portland, and you sit down with your wife and you have kids, and you're like, look, I'm going to take $200,000 of the family's money. I'm going to stick into a coffee shop. Now, if your wife, she might laugh at you and she'll say, you're not taking the family money to stick into some coffee shop because it may or may not work. What I would suggest is that taking that $200,000, putting it into a secure CD and setting that aside, and using that secure CD as leverage in order to get lines of credit. So this is what I mean. This is what I was talking to Wilbur about. Instead of you going out and going and hawk for a lot of the equipment for your coffee shop, what I would do is I would look at every single item in a coffee shop and say, can I lease this item? Because see, if you lease an item, you can write off the item. So I go through, can I lease the furniture? Yes, you can. Can I lease the linens that my staff is going to wear? Yes, you can. Can I lease the equipment that they're going to make the coffee? Yes, you can. Can I lease the mugs, the other utensils? Yes, you can. Can I lease the rugs, the cleaning equipment? Yes, you can. And there are corporations for each one of these. And the reason why I mention that is so that you don't have to take all of your own cash and put it into a company that may or may not fail. See, I believe in successful businesses, but I also believe in the family unit. I would not give up my wife or my kids for a business. I'm sorry. I'd just rather shut the business down. But many men, because I'm a man, but many men will do this, and I've seen it, and it's sad that they will do that, and then their wife leave them, and they're holding on to this business idea, and they're angry at the world, they're angry at their wife because they didn't believe, that kind of thing.
Trust me, I've been there, and my wife and I have had that conversation many times.
Oh, see, I'm not even talking to you, bro. I'm talking to the world right now. I'm not talking to you. But it's true, because it comes across and say, okay, if you sat down and said, okay, let's plan this out. Let's be really strategic about this, and let's really get things done. So that's what I help people do, because I like to see families at least stay together and also profitable businesses. Now, today, I'm not going to go over every single detail of starting a company. I'm going to assume that because you are here, you know how to start a business, you know about a lot of items. And of course, there's always questions to ask. Again, if Wilbur, if you want to ask some questions after we go through, be more than happy with this because I have a lot of information to help you out and help
Absolutely, man.
your audience out. Okay, so what I did today is that before our assignment is that I put together a list of 20 questions. The name of my company now today, we're an Oregon corporation. So my corporation here in the state of Oregon is Oregon Credit Builders Enterprises, but we have an DBA, and my DBA is Academy for Business Credit, and that's what I have right here. So for the Academy of Business Credit, I have 20 questions, and these are the 20 questions going to help you, the business owner, do better business. So Wilbur, you have these, and
Yes, I do have them.
You
And
want to
just
just ask and then I'll answer, or how do you want to do it?
yeah, and just to let the audience know is that you can see the DBA name, Academy for Business Credit, that is something that Charles has been working on for decades. I mean, he already gave you a little background on how he started on business credit. It's not something that he's randomly speaking about. It's something that he's been working on for decades, and also his perspective, like you say, Charles, your perspective is a little wider than an actual banker, because the banker, like you said, may be confined. They may have some financial knowledge, but they're confined within the rules or regulations of that bank. But Charles has a 30,000 feet view from the business credit financial specifically, and how he acquired these knowledges. Mm-hmm. Take it over, man. I see here, these are the really questions that you should be asking yourself as a business owner. Do you have these things before you move on applying for a line of credit?
Okay, so let's go to the first question I have. This sounds simple, and I'll try to keep it simple, but I find that a lot of people don't have this. And I always ask, do you have an operational agreement? Which is, do you have an agreement that shows how your S Corp, LLC, or C Corp is going to be operated within the state that you live? A lot of people don't. And the bankers sometimes will ask for this, and you don't have it. You need to find out what an operational agreement is, how it works. You can Google it. It's very simple. Always keep a copy yourself. Some banks or bankers or credit institutions may or may not ask for it. However, you have to have it to protect yourself in case of lawsuits or other bankruptcy, things like that, that you're operating the company according to the laws within that state or wherever you're domiciled at. So make sure you have that. It's very simple. It's not hard, but you have to have that.
And I wanted to add something, Charles. I'm sorry. I wanted to say, this is not the articles of organization. This is different. This is your operational agreement. Mm-hmm.
Yeah, articles of corporation are what you submit to the state in which you reside. So if you live in California or Florida, you submit to the Secretary of States, you pay them $100, $200, whatever, to show that you're incorporating. The operation was how you're going to operate that corporation. Right. The next thing is that, are you using corporate resolutions? Now, 99 times out of 100, people are not using corporate resolutions. A corporate resolution gives the corporation permission to enter into an agreement. The articles of incorporation, when you do that, you're forming a new entity. Okay, the entity is separate from you. So me as Charles White, if I form a new ABC Corporation, the ABC Corporation is a living entity separate from me. Okay, now that's why in the United States, that's why corporations have almost human rights. That's a whole other thing there. But you're using a corporate resolution to give yourself permission, to give the corporation permission to enter into an agreement. For example, you want to get a car under the corporation. One of the first things you have to have is a corporate resolution that the corporation gave the corporation permission to enter into that agreement. Now, if you have a board of directors, you have to have what do you call it? I'm not a quorum, but you have to have an agreement among the board of directors that you can enter into that agreement. And that's part of the paperwork. That paperwork should be submitted to the creditor. The reason why you're doing that, you want to protect yourself just in case the business fails, bankruptcy, and they're going to ask you, we're going to try to pierce the corporate veil. And what that means is that they're going to try to put that debt back on the shareholders of the organization. So you want to have a corporate resolution, and they're free. You can find them online. They're free. And there's at least a couple hundred of them out there, from leasing to, cars to credit cards to loans to on and on and on and on. But you want to have those as part of it. So that's really, really important. Most small businesses don't have that. They don't know what it is. And you need to have that if you're going for the big lines of credit. This is really important. The next question, what is your budget for building business credit? Now, it's almost laughable, but a lot of people don't even have a budget. They're just like, well, I'm trying to do something. I'm like, that's not enough, man.
That is crazy. And this is something that I also speak to my audience about. It's like, don't go out and get a business credit card or a trade line just because you want to, because there's a huge, you know what I mean? It's trending right now how much business owners, they want to get business credit. But that's an excellent question. And if you ask them, like, what is your goal? What are you trying to achieve by getting business credit? And to be honest with you, it's a little shady, because if you're just trying to get business credit to not be personal liable, that doesn't send a good message to the creditors. It's like, are you saying that you may default in the future? So,
right.
You know, this is an excellent, and I love this question, because it's like, do you have a goal? Having a goal really gives you a sense of, you know, where are you going? What are you trying to achieve? And just not hoard a bunch of trade lines just because you want to get on a video and say, oh, I have $50,000 in line of credits.
Yeah, that you have to have a budget, because things are going to come up that you know nothing about, and you have to know what you're doing. For example, I had mentioned before to some clients about having a telephone line in the name of the business. They're like, well, it costs too much money. I'm like, dude, I said, do you want credit, or are you trying to run a business, or what? But there's a really good reason why, and I'll get into it later, but you have to have a landline. And I'm not talking about a VoIP line. I'm not talking about a cellular phone number. I'm talking about an actual landline, and I'll get into that later. But you have to have a budget. Now, in my suggestion, from my experience, your budget should be from anywhere between $500 at the very, very low end. That includes the cost for incorporation and everything else, all the way up to about between $2,500 to $3,000. That'll pay you dividends, though, in the amount of credit you're able to get, because you set it, everything's up properly, and you set that money aside. But how I also look at it, it's a lot better to do that than take $10,000, $20,000 of your own money and try to build credit than lose it, versus building, you know, the right credit. So my suggestion, about $500 to about $2,500, $3,000.
And that budget, Charles, that budget is set aside once, or do you recommend that budget to be monthly?
No, that's a one-time fee. The only revolving credit that you would probably, revolving payment I would think of is maybe, of course, telephone lines. If you have your post office box in order to receive your mail, things like that, that's the revolving. And then also your yearly fee to pay your incorporation, of course, things like that. Yeah. I have it, what I hadn't said is I have a whole course, and I broke it down. I don't sell the course right now, but in my course, I broke it down all the other items you need to have, and I recommend for my clients. So there's that. This goes back to what we said originally. How much credit are you trying to build, and what is the timeline? Now, I've asked people straight up, how much credit do you want? I don't know. I mean, if we don't know where we're going, how are we going to get there? And how will we know once we get there if we don't know where we're going? So I suggest to most of my clients that, okay, let's say that we start out with $250,000. That's what you want to get to. I said, okay, let's set a date rate of about 6 months to 8 months for $250,000, which is very, very reasonable to get there. At least that way you'll know where you're going, how much to get there. We set out a game plan. We can do the right things. And at the end of the day, you'll be happy because now you achieve your goal, versus saying, oh, I was trying to get $1 million and all I got was 100,000. Well, you know, why didn't you say that from the front? So we can plan things. So you have to know. So this goes back to when you're starting your business. Let's say back to the coffee shop, you know, for good coffee shops, maybe it's going to be $250,000. I said, great. So that means we have to try to get $250,000 from that 6 months or so. And there's a strategy in order to do that. Make sure we're signing the paperwork, make sure we're getting all lease agreements, all those type of things in place, so that once you start, you're not starting from a place of disadvantage, but you're starting from a place of advantage. You know, right. So when the first dollar comes in, you're successful. Everybody's looking at you like you're the hero. Your wife is smiling at you and everything else because you didn't take the baby's money and stick into this coffee. You know, is that I've worked with small businesses for over 20 years. I originally started with IBM all the way through a company that's closed down now. It's called PageNet, which is paging services. And I had to go out and sign up small businesses to resell our services. and I've been very successful at that. We were like #1 in the United States for PageNet. But part of the time that I was there, I was able to sit down and talk with small business owners for hours about their business, what works, what doesn't work. Because often a small business owner will own not just one business, they own multiple businesses. Right. Like one of my clients owned, he owned a waste management company. He owned several gas stations. He had an electronics shop, plus he sold pagers out of his electronics shop, and that's where I met him at. And because of him, I was able to ask him a lot of really in-depth questions about the gas industry. I was asked a lot of questions about the waste management industry, things like that. So it helped me accumulate a lot of information. But the number one thing I realized is that your family has to be on board, #1. #2, you try to eliminate all the fantasies about how things work. You want to get to brass tacks as quickly as possible, because you don't want to be seen as foolish, in the eyes of your family or other people. And I can give you horror stories, and maybe we talk about that later, of other people who were just crashed and burned. And it's just sad, but we're not talking about today. We're going to talk about this today. Okay, next question. Do you know about the projected sales and cash flow for your industry?
I love this question.
I'm laughing because they have no clue about that. Let's go back to the coffee shop. My first question, well, for a first-year coffee shop, how much do you plan on making? What's cash flow? I don't know. Well, if you're going to ask for credit, how... feel me here, but how are you going to ask for credit? You don't know how much the business is going to make.
Right.
So do that simple research to find out first. That's important, write it down, because the bank will give you credit based on your projected cash flow and your projected sales that first year. So what I used to do years ago, I would tell my clients, I said, well, are you going to make 100,000, 200,000 this year? What do the sales say? And then usually we come in, like, we sit down, we go over it. I say, reasonably, you probably could do about, let's say 200,000. Well, I know with a $200,000 figure, the banks will usually give out 10% as a line of credit and a credit card based on that. So if I went to, let's say, Wells Fargo, everything was equal, and I'm applying for a line of credit, they'll say, okay, Charles, we'll give you $10,000 in line of credit, plus we'll give you $10,000 as a credit card also for $20,000. Sometimes they might give you a little bit more. But that helps. Knowing those numbers helps, because now the banker knows and you know what the cash flow is. You feel comfortable about it, and you have a goal to strive for.
And that makes sense, because in every application that I've put in for business credit, they ask you. They can very well go to your business credit reports and see your EIN, the IRS, whatever, and they can see what's your income and your sales, and based on that, they can give you a line of credit. But on every application I put in, it's like, okay, how much do you want? And based on that number, they're going to say, okay, this is how much we're going to give you. So to your point, it's like you have to tell them what is it that you're looking for. They're not going to guess for you. They're not going to do the legwork for you. You have to tell them, and based on that, then they'll make a decision.
Here's another thing that you just reminded me of. When you're doing business credit, you have to make sure that your information is consistent and that it doesn't change. And that takes down a lot of people. So let's go back to what you just said. If you're filling out one application and you're putting down, let's say, $200,000, then all of a sudden you go to another application, you're putting down $250,000, and you go to a third application, you put down $325,000, which is the truth. And then what happens when it's all reported? I have a client right now out of New Jersey. I was looking for the form. He has three different reports, one from Dun & Bradstreet, Experian, one from Experian Business, and one from Equifax Business, and all the information is different. Wow. All of it is different. On one, the Dun & Bradstreet, he says, oh, we're doing $1 million. On the Equifax, it says, oh, we're doing, was it 200,000. On Experian, oh, we're only doing $1,000, something like that, something crazy. The number of employees that you have. Oh, we have 50 employees. Oh, we have 2 employees. Oh, we have 5. It's like you have to be consistent. And so inconsistency is what draws the biggest red flags. You're not consistent. So you have to be consistent.
That's so interesting that you mentioned that, because it has happened to me in the past. It's like,
really?
Yeah. Like you have to, yeah, it has really happened to me. It's like, I'm filling out something for this and I put an amount or a number of employees, but it's like you can, I feel like you can tell, read, when people read your mind or read the future, but you've done this so many times. It's not like you've seen it all. And this is why I'm telling you, yes, I've done that in the past. It's like the inconsistency is that what's going to get you denied. And I always remember something you told me. You told me, Wilbur, let's say you file with the Secretary of State and your business address is 123 Main Street and street is abbreviated. And then you go to an application and you spelled out street. Guess what? When they go out and try to match that information, they're going to deny you.
Yep.
So I always remember that you told me that.
They do. And the reason why they do that is because it's not a person looking at it. It's a computer algorithm. It's going out like a spider and grabbing the information and matching it up. If it doesn't match up, red flag, denial. And also, you got to keep in mind, too, you don't have the same protections as a business owner as you do as a consumer. So they don't have to send you out a letter telling you why they denied you. They can do it as a courtesy, but they don't have to. And I learned this out the hard way because as we were trying to build credit, we were doing a lot of experiments like, okay, what works, what doesn't work? And then once we found out what worked, consistency is what works on everything. Everything has to be consistent.
Very important.
And also last, know your industry. You have to, there's a difference in cash flow between, say, a childcare center versus a coffee shop versus a trucking company. Know your numbers, period. The next question is, are you properly structured? Now,
this is one of my favorites.
Okay, now I can tell you some secrets here. The IRS is bringing LLCs under greater tax scrutiny. Most people don't know that. They used to be able to have a single member LLC, but now the IRS is cracking down on a single member. They want you to double member LLC, and there's a way to do that. Also with S Corps, they were cracking down on that because people were having the cash flow go directly from the business directly to their own pockets. And you can do that under an S Corp, but people were abusing it. So just keep that in mind. If you have an LLC, you bring a little bit scrutiny on it from the IRS. Same thing with S Corp. So I went with the C Corp.
That when I formed my company back in 2016, I did so much research. I'm like, but it's only me. I mean, who else am I? I'm not gonna put a stranger in this. And I say, you know what? Done. I put my wife. My wife owns 10% of the company. I own 90%. And the reason I did the 90-10 is because I don't have to bring my wife every time I'm applying for something. So, applications ask you, is there anybody else that owns 25% or more? Nope, I own 90%. So that gives me really the leverage for me to, be the decision maker, but still a multi-member LLC so that I am covered for what you just said,
But here's one thing that I think that would help you out is that we can talk about this later, but really forming a holding company for your LLC. And this was where, this is going back to like really advanced credit building, but with the people who are advanced, let's say that you build $1 million line of credit, but you don't want to touch it. You can form a new corporation, let's say an LLC that's owned by the holding company, and you can start your projects from there. You're protected by your EIN number of the corporation as long as you run a proper corporation. So the holding company has the EIN number and the subsidiary has an EIN number also. But keep this in mind, this is a secret. Debt follows tax ID. Okay. So what that means is that let's look at the PepsiCo Corporation. PepsiCo has PepsiCo Bottlers, and under that is the Yum Brand Corporation. Yum Brand owns KFC, Taco Bell, and Pizza Hut. Each one of those has a separate corporation with a separate EIN number. So if you go to a Pizza Hut and you slip and fall, you can't sue PepsiCo.
That's true. That's asset protection. It's so interesting.
And so you have to think the same way too for your business. So for protection for your business, I'm not going to get to really advanced stuff, but you want to have a holding company, then under the holding company, then form your project. So that let's say that you, Wilbur, want to have, let's say, a trucking company, a childcare center, and another business. Well, those should be offshoots of the holding company, not the main company itself. Because if the trucking company goes down, you don't want to take down the childcare business and you want to take down the coffee business because you didn't properly structure it. So you can file bankruptcy on the trucking company, keep your credit in whole. And what I recommend is you go back to those creditors and you make agreements in order to pay off your debt, but you just do it slowly over time. So if you know if you have $100,000, you can't pay today. He says I'll pay it off, but it'll be like $1,000 a month for the next 8 years
100
or whatever.
years.
Yeah, exactly. And believe me, they'll take every dollar. They're like, oh, we're more than happy to take it from you. You don't have to do it. They're like, we're more than happy. So just keep that in mind. I don't want to get too ahead of myself, but proper structure is really key. And if you don't know anything, what you can do too for free. You can call Secretary of State's office, and they give you information for free also, because that's part of
Nice.
their job.
Yeah.
Most people don't know that, but I thought I'd let you know. Now, the next question is, do you have a landline or are you in 401 directory? Now, I asked myself, and let me tell you how I found this out. I had a client that had multiple corporations and we were getting credit on. He was in California. And he said, Charles, I went to Wells Fargo and I'm qualified, but they turned me down for $35,000. I said, they should have turned you down because you're qualified for everything. I said, no. He says, well, so-and-so gave me money, but they didn't. He said, and I started thinking, I said, are you a 401 directory? He says, I don't know. So I called the city of New York, and then I said, I asked for his business in California, and it didn't come up. And then I started reading some of the information. I researched about the databases of AT&T, and I told him, I said, look, you got to get in 401 directory because the banks use that to qualify you as a business. So he called them, got in 401 directory, and it was like 2 weeks later or 3 weeks later, went back to the same bank, and they gave him $35,000.
That's just crazy, just because of the number.
Yeah, because you got to remember that AT&T and the Bell operating companies, they call them RBOX, are some of the largest database companies for businesses and people around the world. Think about that. You have everyone's address, you have everyone's phone number, you know how long they live there, everything else there. Also, they use it because it helps prevent fraud as well, too. There's fraud verification, making sure that you've been there for a while. Most successful businesses are going to do the right things. A lot of fraudulent businesses are not going to register in 401 directory and say, hey, come find us. We're right here.
Right.
They're not going to do that. So that's why it's really, really important that you have that,
And then something that you mentioned before this point is that make sure it is a landline. Mm-hmm. It has to be a landline.
Yeah, landline shows permanence. That's what a VoIP doesn't show. That's what it doesn't sell. A landline shows permanence, means that you put down roots. It's like when you get married, your father-in-law says, are you going to buy a house? You got to put down some roots. You can't have the kids living in an apartment. Right. That's how I kind of look at it. You get a VoIP line, a cell phone, it's like an apartment. It's not permanent.
That may not apply for New York City, but I get the trips.
Well, yeah, that's true. Well, I have some relatives live up in Harlem. They have like a townhomes and stuff like that. So that's it's a little bit more expensive.
Yeah, for sure.
As well too, but it just shows permanence. That's there. Same thing. Right. Shows permanence.
So I'm sorry. Go ahead.
Also, you got to think about the big corporations: Microsoft, Google, Amazon. They're not changing their phone numbers. You don't get Jeff Bezos on the. I mean, come on. I would talk to Bill Gates and like, no. You call the Microsoft Corporation, Seattle, Seattle, Washington. Amazon, mm-hmm. Seattle, Washington. Boeing Corporation, Seattle, Washington. There's no land. There's no cell phone.
That's crazy.
It's not laughable, but it's true.
That's what I was going to ask you, because a lot of us, we have a business, but then we have a cell phone number, and that's the number that we're using for our business. So, you know what I mean? And a lot of us...
Can you just sigh? Sigh. Okay, go ahead.
Yeah, I was going to say, now that we know, it has to be a landline. And I know that's a challenge for most of us, because most of us, we're running, some of us have a virtual, which I'm sure we're going to talk a little later mm-hmm. about, we have a virtual office. Some of us, we cannot physically get a landline in a virtual office. The question is, can you get that landline in your home with the business address?
Here's how I think about things, okay? If you're going to be successful, you're going to have to make some sacrifices, okay? So you're going to have to figure out a way in order to get a landline with that address. I can give you shortcuts. I can give you some of my recommendations. If you don't do it, you're going to get less credit. If you do it, you'll get more credit, okay? So what we did initially is that I had the split line with I think it was called Pacific Bell at the time, where they have a line on the same phone number, one for your address and one for your business. Mm. But it's just, so it rings twice if it's business, it rings once if it's a residential, to help you out. Number two, part of that budget that I said about should be that you have a separate place of business that you're doing business in that can receive a landline. It's not that expensive. I mean, I was talking to my brothers the other day. He got a small office. His office is like $100 a month, small, like a little tiny office, but he has a landline there at his office. So the phone costs $40 a month. His office is $100, so $140 a month. But he's in business though. He's not dreaming and wishing. He's a real estate developer. So my recommendation is that when you get the money, somehow, some way, get an office, get a landline, a permanent landline. And guess what? The world start opening up to you and people will take you much more seriously also.
Yeah.
That's my recommendation.
Yeah.
The virtual thing, I'm not really into it because even those guys who have see, the thing about it, everybody wants to be a Mark Zuckerberg. Everyone wants to be one of those guys, oh, we're doing it. But you don't understand, Zuck has serious money behind him. Most people don't have serious money behind them. And with serious money, they're organizations. But my recommendations, just do what you need to do.
And the way I see it, Charles, there are two types of business owners that they're trying to get business credit. Now, if you want to stay with your net 30 trade lines and stuff like that, that's fine. Most of them would not deny you for having a virtual office. Now, if you want to get serious about funding, like real funding, hard cash, then you should start taking your business seriously about, getting a location, getting a facility, getting a landline, getting a fax number, getting all these things that when an underwriter goes out and search your address and your phone number, they're like, okay, these people are legit. Guess what?
Right, exactly.
I don't know if I told you, a fintech company denied me because I have an office address, a virtual office. I have actually a co-working space. And they deny me and they say, Wilber, this is a virtual office. We cannot approve you. So you see what I'm saying? So to second that point, it's true. You have to have a facility.
Yeah, you do. And you don't have to be there all the time. You just have to have a facility.
That's it.
So, I mean, we learn as we go. So we learn as we go. We learn as we grow. How about that? Okay. Now, the next thing is that the difference between a residence and a commercial area. And this is really important. A lot of people are scared to have their businesses in the residence, and they're scared to try to get a commercial. But here's what I learned. I had one of my clients had multiple, corporations, and the guy had equal credit on both corporations. Everything was exactly the same except for the address. He went to, I think it was JCPenney's. JCPenney's has JCPenney's commercial, which is, again, net 30 count. They gave him $15,000 on his commercial address, but on his residential address, they only gave him $5,000. And he goes, Charles, why is that? Everything's the same. And so I started doing research and come to find out that there are databases for the banks to get access to and other financial institutions to get access to about the commercial areas of your city. This is really important. A commercial area is usually an economic driver within that city. A residence is not. So if your business is in a commercial area, they know that you're doing real business and you're probably going to have more income and more cash flow in a commercial area than you would through your residence. Nobody's really going to believe you that you're running $1 million corporation out of your home. Nobody's going to say $1 million. Why is it still at home?
You know what? But that makes so much sense, but people don't understand that. Like, how are you applying or getting like this high limit credit lines when you are still at your home? And some people, I told you that it's like people that I've been trying to help and they're like, oh, I don't have the money to pay for. I'm like, what are you talking about? You don't have the money to pay for transactions that are going to be reported to your business credit that will help you eventually build business credit. So what are you doing?
You have to filter out people. I'm just going to put it that. Filter out some people. But you have to have, I believe, if you want maximum credit, be in a commercial area, and there's ways of you finding that out as well too. Now you can start out in a residence, but you want to start from residence and then migrate to the commercial area. Don't do anything foolish. Okay. Oh, this is really important. I'm not going to go in depth in this. I'm going to cover it slightly, and then I'll let the people do the research. But know your SIC code, which stands for Standard Industrialization Code, and know your NAICS code, which stands for the North American Identification Classification System. Okay. Now, the SIC code was started in June of 1938, but I wrote this down to make sure. It's the Interdepartmental Conference on Industrial Classification. It was actually a way in order to classify industries within the United States by a number system. And also they classify them according to sales, number of employees, and historical data based on that corporation. So let's go back to the coffee shop. The coffee shop has a very distinct SIC code. Well, according to the government, they keep track of all the sales, the number of employees, and other information based on the SIC code. Okay.
Interesting.
That's really, 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 really important. I'm just going to put that hint out there. It's really, 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 really important. The NAICS code was an updated version of the SIC code. However, it was started in 1993 by the Office of Management and Budget. And the reason why there were so many different diverse economies coming out in the 1990s because of the internet and things like that were coming up, they had to have new classifications for it. And there are different classifications if you're doing business in Europe. There's in Africa, the Middle East, in Asia also. And I know some of those, but I don't know them. And there are also different classifications if you're being a government contractor also. They're called CAGE. I forgot what CAGE stands for, but it's a CAGE number also. So, but it's really, really important to know those numbers and know the historical data behind that numbers. I'm just going to put that out as a hint. I'm not going to say any more, but it's a hint. You have to know that, period.
This is so next level information, man. And I'm so grateful and glad that you were on talking to the audience, guys. I mean, we cannot stay in this tier 2, tier 1, net 30 accounts forever. We have to move on. We have to transcend. Like I told you from the beginning when I opened up this channel, it's like, what is your goal? Well, my goal is to get business credit for me to invest and have, create wealth and have more opportunities. But you cannot do that if you stay stagnant into a first tier or applying for ordinary credit. You have to get this kind of information that Charlie is so generous to get on the channel today and give to us. This is so next level, man. Thank you so much.
Yeah. Well, those couple of hints will be the difference between you getting, let's say, $50,000 and you getting $250,000. I'm just going to drop that as a hint. Okay. Now, here's something that it kind of upsets me about people. Not people, anybody but in the past, I ask them, how many applications are you filling out per week or per month? You're trying to get business credit, because here's the mentality. One mentality is like, oh, I'm trying to get 5 reporting on Dun & Bradstreet. The other mentality is, I'm trying to get as much credit as possible, So when we were starting out, my brother and I, we would fill out anywhere between, I'm not going to exaggerate too much, but anywhere between, let's say, 5 to 10 applications, sometimes every day, sometimes a week.
Wow. That's a lot.
Well, we had to get credit, period. We were going someplace. So you're not going to stop me because I'm trying to fill out an application. Okay. You're not going to stop me. So I said, we're going to learn. We're just going to start filling them out. We filled them out. We found out what works and what doesn't work. And what I found out what works is that if you're not asking for cash, you can fill out as many applications as possible for standard, what they call vendor credit. This is how come I know there's hundreds and hundreds and hundreds of companies out there that'll give you lines of credit based on your EIN number, employer identification number. That's, let's say, that'll help you for your business. So I'm thinking that, okay, if you're in trucking, okay, now you need gas. There's gas cards, of course, which you already have. There's, maybe not clothing. If you have uniforms for you need for that. Cleaning materials, you need another thing for that. You need it for a host of other items also. I said this before in one of was it the podcast or I was on the call or something where I told you that you can get no PG credit for leasing. Did I tell you about that? Or
you've told me about that, and I heard it on the podcast too.
Yeah, so there are a lot of companies that will give you that with no, you don't get your social security number, just get the EIN of the corporation. And what that does is it helps you preserve cash flow. It also helps you preserve credit also, that you don't have to worry about using your credit because you already have a line of credit with this corporation that's going to give it to you. So we found out about this. So that's why we're filling out so many. So we had a lot of credit, a lot of credit.
Imagine putting that number of application that often. But this is one of the things that I also tell people that I try to, talk about. I tell them, why are you applying for, when you're in e-commerce, why are you applying for Home Depot? It doesn't apply to you. Try to be smart. I mean, I guess that it really helps you further your credit and expand it. I understand. But like you said, if you're a trucker, have 5, 4, fleet cars or gas cars in your repertoire. If you're in e-commerce, go ahead and get an Amazon net 30 account.
But here's the thing I have about e-commerce that I don't like, and I like e-commerce a lot because I make good money from it. But what I don't like is how it's sold by the gurus. If you have a business that's e-commerce, guess what you have? You have a physical location, you have a telephone line, hopefully you have a warehouse of some of your goods and other marketing materials, and your actual real business. So my definition of a real business is something that can be sold apart from you and you can make money from. So can I sell my e-commerce business to you with all my assets of it to you? If I can't, because all I have is a laptop, I'm really kind of suspicious. Do you really have a business, or do you just really have a job that you're making money at? And to me, a lot of times it's just a job. It's not
there's a huge difference between owning a company and being a freelancer. So there's a huge difference.
Yeah, but there's a lot of tax difference also in doing that too, because I can write off a lot of things because I'm running an actual e-commerce business versus trying to run it from my laptop, and I want to live the digital lifestyle kind of thing. So I just believe in filling out credit applications, everything. And to me, the hardest part, because I know so much about business credit, the hardest part is filling out the applications because it gets redundant. The same thing over and over and over again. And then some people, it's really funny. They're like, how'd you find us? What do you mean, how'd I find you? I'm in the industry. Well, we usually don't have people who apply for credit lines. Really? Yeah. Well, I'm here. So they gave it to me.
That's crazy.
No, because you got to think about it. A lot of industries are small. Are diverse, and they have a lot of people. I mean, we're the nation. I can't think of how many multi-millions of small businesses we have in the U.S. And a large portion of those offer vendor credit, 30-day, net 30, net 60, net 90. But many people don't apply for it. They just don't.
But you've told me companies that I'm like, huh? They have a line of credit? I mean, you've mentioned companies, and I'm like, no way.
Yeah, because here's the thing about it. It's the wording you're using. See, you're saying business credit. I'll say commercial credit. I'll say vendor credit. See, there's a difference. See, I'm not asking. So like I said, I told like JCPenney's, most people don't know that JCPenney's has commercial credit available for retail. They don't know that Tiffany's, the jewelry store, they have commercial credit available.
How about Macy's?
They did for a long time. They still might. Macy's was going through a really hard time because, Macy's has Bloomingdale's. Bloomingdale's had it separately. What's the other corporation that Macy's owns besides Bloomingdale's? Blue Mercury, I think it's called, and a couple other ones. They used to have them under Macy's, and they changed over to Bloomingdale's. I think Bloomingdale's still has it because under commercial vendors. But they were going through a hard time. And so you have to check to make sure. Yeah. Other corporations have them though. From Walmart has it.
Walmart has it through Sam's Club, right?
No, they have other credit available under the main Walmart corporation. Because you have to look at what you're doing, and that's really important. So if you're going to become a vendor to Walmart, they have different like net 30 days and things like that for their vendors. If you're looking at what's the other big corporation? Target has it too. Wow. But then you can go on and on to like small vendors like Michael's. Are you familiar with Michael's?
Yes.
Craftscom. Yeah, they have it also. We had a list again. Hotels have it. Car rental places have it.
You sent me a list. Didn't you send me a list of?
I sent you a list, but guess what you didn't do?
Look at it.
I'm sorry, I sent you so much information, but it's all there. And all
you have sent so much information, and that's why I told you. Like you mentioned, companies I wasn't even aware, but I skimmed through the list, and it's huge.
Well, if let's say that you decide to later on own a hotel, did you know everything in the hotel, every single thing can be gotten through vendors and vendor credit? We're talking about the linens on the beds, the pillows, the artwork, the furniture, the TVs, the uniforms, and on and on and on. Vendors.
Wow.
Yeah, so that way, and it's a smart way to do it because you have to come out of your own cash, a lot of these things in order to get it done.
Right.
So, and also it becomes a tax write-off also. So that's the key for some people. If you're out there wondering, don't just use business credit when you're searching. Search for vendor credit, search for commercial credit. Okay.
Commercial credit. That's key.
That's worth a couple $100 right there. That's really
and you guys are getting it. You guys are getting it for free. So
yeah. Okay, let's go on to the next one. Here's another my pet peeve, and you know this to be true also, Wilbur. I asked him, have you met with at least 3 bankers face to face? No. Wait a minute, you're in business, aren't you? Yeah. You haven't met with a banker yet? No, I'm intimidated. No. Why? What I think it is a lot of people feel like they're frauds. And so they sit down with a banker, the banker will see right through them that you're just a big fraud. You don't have a business.
There's a syndrome. It's called the
imposter syndrome.
Imposter syndrome. Yes, the imposter syndrome.
Yeah, that is true with a lot of people. But here's what I learned. When I was building credit, you hit a ceiling on how much credit you can get just filling out applications. And I needed more, and I had to find out more. So that's why I started becoming friends with people at banks. And within the bank, there are different levels of credit. So let's say if you go into like a standard bank, Bank of America, usually they'll deal with you up to about $250,000. Okay, just sitting in front of somebody, let's call her Becky. Becky, oh yeah, we'll give you $250,000, whatever. But if you want more, you got to sit down with a commercial loan officer. A commercial loan officer usually works from about $1 million, maybe $3 million, up to $20 million in lines of credit. That's the person I want. So I went out and sat down with him. We sat and talked for a long time, gave me a lot of great information to help myself and help my customers also. But also the reason why is that if a bank knows you, they're able to give you more inside information on credit than someone who is not part of the bank or who they don't know. And you're the same way too, because why would you give your best information to people you don't know? You're not going to do it. So my suggestion is, for my clients, you guys sit down with 3 banks. I always suggest that you're with more than 3 banks, but I suggest you be with at least 2 national banks and then 1 local bank. So it'd be like, okay, have a Chase account, have a Bank of America account, but then have a credit union account also.
Yes.
Because banks have personalities, and some banks don't want to deal with your particular industry. So let's say if you're a restaurant, Chase may like restaurants, but Bank of America may hate restaurants. They may prefer trucking. And where your local person may hate both trucking and restaurants, but they like, another type of business, say janitorial business. They love those, because of different cash flow needs, things like that. So you have to know. I've had clients get shut down because they didn't take heed. I'm thinking about one of my clients right now. They had a big line of credit and got shut down. They were upset. And I said to him, I was going to say his name. I'm not going to say his name. I said, did you do what I said? Did you have more than one line of credit? Did you have more than one bank? No, man, I had all my business there. I was like, why would you do that? Oh, well,
It's like putting all your eggs in one basket.
Yeah, that's exactly what it is. So over a period of time, I believe that just between me and you, I believe a person, really a small business owner, I wouldn't be in anything less than 5 banks, in the long term, at least 10 banks.
Wow, that's a lot.
No, it's not really, because you get shut down one time. Guess what? It's not a lot.
That's true. You will wish at that time when you get shut down that you had another one.
You'd be so mad and upset. You're like, what, them so-and-sos? I gave them all my business for a number of years. And yep. Nope. And guess what? Large corporations do? They're with multiple banks also. Do you think Microsoft has all their money at B of A? Are you kidding me? Now, let's look at the next one. What does your company own? What are the assets of your business? Please tell me. If you have an e-commerce business, what are the assets? Wilbur, maybe you can give me some insights to that. What are the assets?
What is under my company's name?
Yeah, I'm asking you. What I mean.
Well, I have you're like, yeah, I'm waiting. Yeah, I have a computer under, I have my computers under my company's name. I probably will get a car soon under my company's name.
Okay, here's the truth. Most small businesses don't have many assets at all. And they complain because they don't have any lines of credit. But what I learned, and I learned some secrets, is that what I started doing with my clients is they start acquiring assets under the corporation. Now, many banks, I used to have this list from Wells Fargo, I don't have any more, but they told me how much they would loan on certain items. Like for artwork, they give up to 50%. Brand new car, they'll give you up to 80%. Land, depending if it's cash flow land, they'll give you so much, almost 100%, things like that. But you can do that and own that under the corporation. So my suggestion, though, for my customers is this. Banks love sticks and bricks. Sticks and bricks are usually real estate. You want to find some of the cheapest real estate you can and put it under your corporation. Okay. Yeah. There are pieces of land across the U.S. that you can buy for, and I know this to be true, and I haven't shared this with Wilbur, but you can buy from anywhere from as low as $500 for, let's say, a small half an acre to an inner city plot of land for $2,000 and put it under the corporation. Okay. Now, the good thing about it is that you don't have to give the appraised value. It's up to the banks. You tell them where it's located, and they have software. They can find what the appraised value is. But guess what? You're ahead of 99% of businesses because now you have actual real estate under the corporation. Most people don't have that at all. And you know that to be true when you ask around different business owners, do you own this land? Do you own this? No, well, we don't own anything. We just, I own barely the clothes on my back. What are you talking about? But when a bank is looking at that and look at lines of credit, they're looking at things like that. What do you own? If you own nothing, why am I giving you any money?
Why would I give you any money? You have nothing to lose.
If I give you money, if I give you money, it's going to be predatory money, high interest rate money, because I don't know where you might go. So yeah, I'll give you money, but it's going to be a 30% interest rate, which is crazy, especially when you look at interest rates down in the U.S. are barely like above 1%. And a person really has to think about that. So what I would do is that this is more advanced credit building. Think about assets, actual assets you can put in your corporate, such as a car, such as land under the corporation.
Right? Definitely something I'm looking forward to.
All right, we have some more questions here. I know it's a lot of good information and we'll have more of it. Here's something that's really simple. Do you have a website? And do you have social media? No, I'm laughing because a lot of companies don't even have websites.
That's right.
And they're not on Facebook. They're not on Twitter. They don't have Snapchat, Pinterest, and some of the other ones. And guess what? The major credit bureaus, and I know this from LexisNexis. I don't think you've talked about LexisNexis or the LexisNexis full disclosure.
No, we haven't.
Okay, well, part of that is that they accumulate all that information about your company within their databases. So if you don't have it, it draws a red flags because we live in the information age. You have to have that, period.
Yep.
And if you don't know how to do it, hire a 15-year-old to do it for you.
They'll do it.
Yeah, you have to have it. And then keep in mind, too, is that whatever you put out there, it stays out there permanently. So, a lot of people are not sure about this, but it's true. It stays out there permanently.
Yeah.
So, the next question, do you issue press releases about your business? That's really important. Most people don't issue press releases because I guess they don't want the world to know what they're doing. But a press release acts as an announcement to the world. This is what we're doing. This is the direction that we're going. But there are databases that keep track of this information also. So if your banker is going to pull up or the underwriter is going to pull up information about your company, they're looking for what's the new ideas, what's direction they're going, how can we read about this company, And the more information you give them about yourself, the better off you're going to be.
And I guess like going back to what you said about when an algorithm it's going to crawl the web, if they come back empty, then how reputable are you? But with these two previous points, press releases and social media, once that algorithm goes out to crawl the web, they're going to find a lot of things, which is going to really give you a more reputation that you are well established.
You know, what we used to do years ago is that I always recommend to my clients that you always want to give your bankers a mug with your name on it and pens with your name on it also. So when they're talking to their friends and colleagues, they say, hey, where'd you get that mug from? Oh, it's from Sam's whatever club. It's like, oh, okay, that's a nice little mug, a nice little pen. So that when you're coming in to the bank now, you're asking for a line of credit, like, oh, yeah, you got the mug. Okay, this is great, because like you're dealing with people.
Right.
And so they can do things because you're a person that they like versus someone they don't like or don't know. And they can recommend recommendations. And so the cost of pens and mugs are very cheap, and the amount of return you can get for sending that out to your clients, especially the bankers.
You know, something that I use with my clients is that I give them a gift every quarter. Every quarter they stay with us, they get a gift. You know, the first quarter they get a book. Second quarter they may get a pair of AirPods. The third quarter they may get an iPad, or you know, the fourth quarter, a year in, they may get a Mac, a computer. And these are things that I can use my accounts for. I can write them off as well. But that's very important, because you know what I mean, that shows that I'm value the customer, and also they've been paying me money for this long. So a gift like that, even if it's a MacBook for $1,500, that's nothing compared to the money that paid me the entire year.
But you keep in mind too that banks, they don't do it as much anymore, but in the past they used to do that all the time. Send out different like pens, pads, papers, piggy banks, things like that to make you think about the bank. But things change. We're not going to get to why things change, but things have changed, and so they become much less competitive than they used to be.
Yeah.
The next question. This is really good. What industry experts are you using? Most people think that they're the guru on top of the hill. They know it all.
Yeah.
But I always ask what industry experts, because the industry experts help eliminate blind spots. You may think that you're going a certain direction, but you may be about to go into a hole you don't know about. And usually industry experts don't cost that much. In fact, there's a free source for that through SCORE, score.org. I don't know if you're familiar with Senior Corps of Retired Executives. I was just on the website before we got on this call. And now what they're doing, if you're not making a phone call, you can go online and they'll call you about your industry. And that's free. But you have to have some industry experts on your board, or not your board, but in your back pocket or in your area of influence.
Your circle. Yeah, that's so important. And this is one of the reasons why, having this friendship with you has been so great. And you know what I mean? Not only because I've been educated, I've been really reading about business credit and researching, which is, why I'm where I'm at right now. Not that it's a big deal, but also I don't take that as an absolute, that I know everything. So having you on and getting all the information I've gotten from you, it solidifies my, my position, my knowledge, it contributes to the people that we're helping online, so that is so true. But the next question though it's also one of my favorite questions, and I cannot wait for you to break that one down.
Jump to the next question then. It's like, the next question, who are the underwriters of your credit, and do you have a relationship?
Oh, man.
That is so important. I had mentioned to Wilber, he had talked about business credit initially in the beginning days. And I said, have you looked in the back of your card and see who underwrites that card?
I remember like it was yesterday. I'm like, yeah. What are you talking about?
You turn the card over. Oh, yeah, you should give them a call. He called him. And then I forgot what 2 cards you got, and you got more credit.
It changed the way that I looked at my trade lines, and I started to calling these people and speaking with them, and they know that I'm a real person. It changed my entire perspective.
It changes everything, because people don't understand the financial underpinnings here in the U.S. and who controls what. A lot of the companies like Synchrony Bank, I think it's called, HSBC, Citibank, sometimes B of A are underwriting a lot of these banks. I mean, underwriting a lot of these companies. So if you can understand that and get a relationship there, it goes a long ways. Now, let me give you a secret that you may not know about. Wilbur, you didn't know this secret.
Another one.
Yeah, another secret. Did you know that for a lot of these companies from like Staples, Office Depot, Best Buy, and other companies, they all use the same call center?
Even though they're different companies?
Yeah. They all use the same call centers. I'm not going to tell you how I found this out, but this is one reason why many times people get turned down for credit. Because you're not talking to the company itself. You're talking to a call center.
You know why? And I'm sorry to make it pause there. It's like I used to work for a call center many years back. And in that call center, they have Nissan, they have Google, they have so many companies, but it was the same call center. So that makes sense.
Well, you have to think about it. If you have a corporation that has a few hundred locations, you don't have time to have your employees, your well-paid employees, answer phone calls, especially for credit applications for people who want business credit. And so I said, oh, so I do a lot of research. So I found out there's these big companies that have thousands of people they employ, that from like Victoria's Secrets to all this, they all use the same company. And I said, oh, then I found out that if you're not talking to the company, that's one reason why you're not getting credit, because you're not talking to the company. And a lot of companies want to offer credit, but that call center acts as a barrier because the call center is only going off a template. And unless you match up with the template, they'll say, oh, forget about it. We'll deny, next customer, please. Next call, please. Everything else. So what we were doing is that instead of doing that, here's a trick that we used. We would call the company directory and then find out what the direct number is at that company or the site, whatever. I would call, say, hey, look, I want to order an item. Let's say a pair of new gloves. Am I talking to the company? Yes. Or I would ask, am I talking to the company? Yes, you are. Okay. At the same time, before I pay for it, I would like to open up a line of credit with your company. Oh, we'd be more than happy to open a line of credit for you. Yeah, because now I'm a paying customer, whereas before you weren't a paying customer. Then they would open up the line of credit. I would pay for it, and I'll be on my way. The difference is that, and sometimes they wouldn't have me fill a large application either, because I'm a paying customer. And there's a difference between a paying customer and some guy sitting behind a computer trying to fill out an application. That's the secret. I was putting it out there right there.
It's a huge difference. And that's why, it's like when you are on the phone, and that's something that I've never stopped doing. And after you told me that, get on the phone. And you know what I did today? I don't know if you saw a video that I put out that says that Staple denied me. You know what I did today? I got on the phone. Spoke with a person. They contacted with me on the phone. They contacted the credit department, and I'm waiting to hear from them today. But they say, I don't see why you cannot be approved. So you see what I'm saying? And you also told me that you said you got denied one. So what? Go ahead.
We're taking out of my secrets though too. So let me tell you. Okay, look, now we talked about it. Here's another secret. Most people stop when they say no one time.
Right.
Most people stop. We would call so incessantly. I mean, I don't care if they said no the first. I'll call them again. 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 Until they know who you are. I'm calling again. And often they would give you the credit just because. And also I'd say to them, oh, you don't have to give me a huge loan. Just give me like $100, $200. Okay, here you go. Thank you. So that's the secret. Most people don't call them. They call one time.
You got denied. You go with your tail between your legs, and you.
Yeah. What's that song? Wah wah wah.
Yeah.
You have to call. But that goes back to guerrilla tactics. That just goes back to I have to have it, and so you're not going to deny me. And if you deny me, you got to tell me why. And guess what? I'm going to call you tomorrow, and then I'll call you the next day, and I'll call you the next day because I have to have it.
You tell me why, I correct it, and I'm calling you back, whether you tell me why or not.
And often they'll just give it, and many times they'll just give it to you so you'll stop calling too. Seriously, and you think I'm joking? I'm being very serious. They will. The next thing is, let's go to the next one. And this is really important too. I asked my customers, what is the MSA for your area? And most people don't know what I'm talking about. Well, MSA stands for the Metropolitan Statistical Area. It's the economic driver within that city. Here in the United States, there are 300, I think it's 27 MSA areas, and those are the economic drivers. The economic drivers, that area that brings in the money for the area within that state or that region or for that part of the country.
I can tell you in New York City, which is the MSA, parking tickets.
Oh, parking ticket.
Holy moly, bro. Parking tickets.
Yeah, I'm not going to talk about New York City right now. They're in but let me talk more specifically about MSA. MSA would be where you have your factories, you have your distribution centers, you have your areas that are bringing in large capital. So like in the Portland area, you have Portland metro area, which would cover Portland, Beaverton, Hillsborough, and I think it may even cover parts of Southwest Washington. That's what they call an MSA area. That's the economic driver of the area. You have to know that, because if your business is not within an MSA, you will get less credit, period. Now, you can go look up Wikipedia, and I just did this 2 days ago. I did this. You can see the areas of the MSA. MSA stands for Metropolitan Statistical Area. That's really, really important, and that's a key.
Is that a little similar to what was the other one that we saw before? Commercial area, difference between being in a
It's similar, but no. Okay, commercial area may be designated a certain area of the city, but certain commercial areas have they're underutilized, and so that's what they have, like the industrial zones, because you might have a commercial area, but it's doing no business.
Right.
So it would not really be part of the MSA. MSA is actually area that's actually doing business, and they're bringing a lot of money to the city. It goes towards taxation and shows where the state government, their money is going to come from in the state government. So the state of California has many MSAs. Nevada has maybe a couple of them because the smaller you have Laughlin, Las Vegas, and then Reno. And then outside of that, you really don't have a lot of economic business going on except for mining and maybe some ranching and that kind of thing. So you have to know that. So just do some research, you'll find it out. The next question is, how far can you be from a local branch when getting lines of credit? Here's another key. If you are outside of 30 miles from a branch, from a credit, let's say you're Bank of America, you'll get denied automatically. The reason why is that they've done research, and those companies are actually doing real business that they feel they can have a relationship with. They feel they can't have a good relationship unless you're within a 30-mile radius of the local branch of that bank.
Oh, wow.
I've had clients get automatically denied for that. Clients in Hawaii get denied because they were outside of the 30-mile radius because they're on a different island. They couldn't get access to certain things. I've had clients that, like, if you're in certain rural areas, you're not near a bank branch, we're going to deny you. But there's a way to get around that, though. And what I always suggest they do is that you can incorporate as a secondary or subsidiary near that bank, and then you'll start giving you credit lines. So if I lived in rural Texas, I can open up a branch in New York City. And then I can get applications to New York City from New York City banks because I have a domicile within that state. And according to the state charter, they can loan out to corporations within that state, even though I'm in Texas.
Man, you're dropping nuggets, man.
Oh, yeah. But the thing about dropping is that they're major corporations. They do this all the time. That's why do you think Microsoft's incorporated in every state? See, this is like big money stuff, but they get access to money, not because only for sales, but because they're looking for cheap money in order to run their organization. So if I can borrow money from at less than 1% interest rate, inflation here is at 4%. So they're almost paying you because you're borrowing money. So it's the ability to borrow money. So that's just one key. Let's go on to the next one. Oh, here's something So I'm laughing because some of these are so silly that people don't do. Are you properly licensed and are part of your state's industry associations? A lot of companies aren't even licensed. You tell these e-commerce companies they're not licensed. They're just like, they're running off in the back of a laptop.
Do you need to be licensed though for certain industry?
Okay, tell me what industry doesn't need to be licensed.
No, I thought that, only if you run some certain things like, like you
Again,
need
tell me what industries don't need to be licensed.
for instance, digital marketing, what's the license for that
Yeah, what city are you running it in?
in Arizona,
So if you
Phoenix?
go to the city of Arizona, say you open up a business, they ask you where, you run an e-commerce business, say, great, we'll issue a business license. A lot of people, they do this and like, why do I need, and that goes into a database. So when the banks check for your company, oh, let's check to see if they're licensed in this here. Oh, they're not even licensed. Uh-oh, red flag. Are you part of your industry associations? You're not, but you say you're a trucker. Yeah, but, oh, red flag.
Mm-hmm.
A real business over here, they're doing all these things. And that's why they're getting lines of credit. You're not. That's why you're not getting it. It's real simple. A business license in many areas, it's really cheap. Some are like $10, some are like $30. Just pay for it. It goes into a database. So if you don't have it, that could be a key though. Oh, here's a real big key. What does your personal credit look like? And what is your debt to income ratio? Now, you talked about PG credit, which I understand. Everybody likes it and everything else, but at some point, you might have to personally guarantee something. If they offer you a $100,000 line of credit and they say, okay, you just personally guarantee it, or you're going to start shaking. Now, let me tell you an embarrassing situation that happened to me. So, Wilbur, don't say anything about you, but I'm just going to tell you about me. I had a very wealthy gentleman. I had a great business idea, and I need 150,000, 125,000, whatever it was. And he said, I'll give it to you. But he said, before I give it to you, I want you to get a line of credit for it. And I said, line of credit? This is like years and years ago. I said, what do you mean? He goes, well, I'll put the money into a CD and you just borrow against the money in the CD. I said, that's great. So I went down to the bank. I was all happy and stuff too, had my best suit on, whatever. And I told the gentleman at the bank what I want to do. He goes, oh yeah, we can do that here. How much do you want to put in the CD? I said, I was thinking about 120,000, 125, something like that. Oh yeah, we're more than happy. We'll open up an account and get things going. I said, great. So I sat there, I was happy. You look around, nice leather chairs. I still remember to this day, it was in Cerritos, California. I remember exactly where I was at. The guy comes back, he's kind of angry. I was like, what's this dude's problem? You have bad credit. What do you mean I have bad credit? And he started bringing up all these things I had on my, and I was like, I was so embarrassed here in the bank. I was like, oh, you need, yes. Oh, I'm sorry. Well, okay. Thank you for your time, sir. If I had taken time to make sure that I at least have good credit, which means no collections, no lates, no bankruptcies, no public record stuff, I would have got the money. I didn't have it. I lost out on it. So as a business owner, as much as you can, I know things are difficult for some people, have good credit, period. I used to clean credit, so I know how to do it, but you got to have good credit. So have that.
Yeah, I think that's important too. And I think you and I have touched on that. It's like, there's no way that Chase is going to give you a business card without personal guarantee. There's no way. Or this, the conventional banks, Bank of America, these banks, American Express, they're not going to give you anything unless you're personal guaranteed.
Well, that's not entirely true, but
unless you're making, I'm talking about small business, unless you're making 5 millions, you know what I mean? 5, 10, $20 million. Yeah, but yeah.
Right. Yes, that is true.
You're like, well, about that.
Yeah, that's true. Here's another key. As we answer our last questions, is that, do you know that people that buy companies for credit?
Yeah.
They buy the company because often they don't want to go through and build a corporation. They just want to buy it. They'll buy it with the cash flow and they'll buy it with tax records. I remember I mentioned my friend James personally at the beginning of this interview. That's how he's able to build his company between $20 to $40 million. Because he would buy a company, look at how much credit line they had, look at how much cash flow they had, and get in really cheaply by just assuming the business and taking over at least a fifth. No, he would take over like 75% of the business, or somehow he would structure it. And then he'd go file for more credit lines. Wow. And they would give it to him because he had everything in place, landline, tax forms, everything in place.
Yeah.
So why wouldn't B of A give him $250,000? Then he would stack that money and say, oh, I got $250,000. Let me go buy another company.
That's
and do the same thing again.
Genius.
He could show cash flow. He could show tax returns. He could merge the companies together under a holding company, and then say, hey, okay, I need to get can I get a $2 million line of credit? I have this, and they look at it like, wow, okay, you see what you're doing. Here you go. So, and in fact, this multi-billionaire, I don't know him personally, but he and his brother, they're both worth multi-billions. That's how they did their business. And that's how come they're worth billions of dollars. I don't know if you're familiar with the Gore brothers.
No.
Yeah, look up Gore. They own Platinum, I think it's Platinum Equities, I think it's called. But that's how they started out. They would take over smaller companies and just leverage the company and then buy other companies and leverage that company and buy other companies and leverage it. That's how they would do it. Man, because why would you build out credit if you can buy the credit? Why would you build a corporation if you can buy the corporation?
Right.
With tax returns, with good relationships. I mean, that to me, that's a $1 million thing right there.
But you know, it's like we lack all this information. Information is power. You think it's a cliche saying, but it's true. It's powerful. Like information, really, it's power. You know, if you own a business, sometimes you get intimidated because you don't have a lot of money to do the certain things that you could do if you could leverage OPM. And part of, leveraging OPM is, funding via your business, but you need to have all this information, and most of us, we don't have it.
Well, one thing I would do for my clients is that in the course I used to sell, my course was like $2,100, $2,500. I know that as soon as somebody bought it, they would have buyer's remorse because that's just a natural thing. So what I would do for my clients, I said, look, as soon as you buy it, I'll make sure you get money in your pocket as quickly as possible. So through the SBA, they still have them now. I was going to tell you about it, but they have it now called the SBA microloans. And back in the day, it was a one-page application known as a SOHO loan, small office, home office loan. It was up to $35,000 at 7%. It was prime plus 3 or 4 points. They would fund your account within 7 days after approval.
Wow.
So I had many clients, as soon as that happened, have filled the application, within the week, they'd have money in their account. And they're like, wow, Charles, I spent $2,000 with you. Now I have $25,000. And plus we'll do a B of A, get another, $25,000. We'll do a Wells Fargo, we get $10,000 or $15,000 there. Now they're up to almost to $75,000, and they're happy.
No buyer's remorse.
No buyer's remorse, but they're happy and they're moving on. And the reason why I would do that is because when people are starting with business credit, they're trying to get someplace. I want to help you get someplace there, but as soon as I help you get results as quickly as possible, oh, you're happy. You can't stop singing my praises. That's one reason why I had never advertised, because I would only have referrals.
Right.
If I got you $100,000, guess what? Can you give my brother some money, man? Oh, can you help my mom? She has this business. Oh, can you help this person? Oh, my cousin, he lives here. Can you help them? Oh, yes, I can. Visa, MasterCard, American Express.
That's it.
Seriously, that's it. And I get you going.
And it's not coming from you from a sales perspective. It's coming from somebody else's testimonial and saying, hey, I'm telling you, I got this from this person. Do it.
Yeah, all day long. And then it just starts escalating up and up. As we start winding down, because we've talked about so much. One thing I want to recommend is that everyone should have an umbrella corporation when you're building lines of credit. This is a corporation that you don't touch, but it builds credit. Okay. And then when you have your idea or you have your business, you form a new corporation and run your business out of that new corporation. Because if the new corporation goes under, debt follows tax ID. The umbrella corporation has a tax ID, you have an tax ID. And as long as it's not fraud, they won't pierce the veil. They call it the corporate veil. Right. That's the key. The next thing is also file taxes. There's nothing wrong. You want to file taxes so you have a history.
Right.
So that if you're applying for something and say, well, we didn't make a lot of money last year, but here's our tax returns they can look at, it's that you're doing real things.
Right.
And this is like one of my last things, but larger lines of credit, 100,000, 200,000 at a single institution usually involves having some kind of collateral. Usually it does. That collateral could be cash. That collateral could be assets, but it is usually something. And sometimes, depending on your relationship, they can multiply how much money they give you. We talked about this before also, like with, this is not a bank, but I'm thinking about like Home Depot. Home Depot has like 30 different companies under Home Depot, and you can apply for credit at each one of those companies. Well, the same thing at banks. Guess how many, Wells Fargo, how many leasing companies do you think they own? How many other financing companies do you think they own? They own a lot. Once you're into the ecology of that bank, it's easier for them to give you more versus when you're not in the ecology of the bank. And when you have assets, it's even easier because now you have assets. So there's no reason why a common person, I mean, I could take somebody, I still could, but I could take somebody off the street, just give me your business idea, and we can get you like close to $250,000 within 6 months. It's easy. It's like you just do these things. It's easy.
Yeah, and that's the thing. It's like all this information, man, it's just it's available, but you you would not know what you don't know. So you know what to ask for. You don't know the questions, like you said, when you sit down with a banker, you know what I mean, and you start building that relationship, you start to speak with them in a language that can understand you. And because you have built that relationship, they can give you a different amount, right? They know you already, so to speak, business-wise. And, they like, when you got on the phone with that call, I am paying now for this order. And by the way, I want to open a line of credit. So, and this information, like I said at the beginning, it's like, where do you find it? What do you ask for? And this is why you charge and you only work with individuals, you know what I mean, who are in a different category, that they have real business, you know what I mean? And they're able to afford your services too.
You know what? Yeah, it's true. Well, I think that we're going to have a part 2 to this interview, because I think that people are going to start asking a lot of questions. They want clarification on some things. And as I'm talking, and I'll be honest with you, I had the class I used to teach was 4 hours long because we hadn't even gone over the history of credit. Remember what I sent over to you about the secret history of the credit card?
Incredible.
Yeah, we hadn't talked about the psychology of credit. Did you know there are emotional triggers they use in order to get you to use credit cards? They're color triggers, because you notice there's certain colors they use. We hadn't talked about all the thousands and tens of thousands of people who've gone over studies to make sure that you stay in debt and that you're taking out credit. We haven't even talked about that. It's like I was thinking the other day, it's like, yeah, here are you as one person versus 10,000 people who are thinking of every single way for you not to say no to this credit card. So we hadn't even talked about that. We hadn't talked about the banking ties between Experian, Equifax, TransUnion. I haven't even covered the SBFE, which is Small Business Financial Exchange. I mean, we might have to go back and just do part 2 and have another 20 questions and stuff too, because I'm just thinking right now of all the questions. I forgot about that. Oh, I forgot about that too. So based on the response from this video, we can do a part 2 and have a whole another 20 questions and stuff too. So
there's so much information here. I hope you guys, are taking notes. I hope you guys are soaking in all this information. I don't think you're going to find this kind of information for free. And Charles, again, has been so generous with not only his time, but also his knowledge that he has built up, decades of research and working with oil corporations. Charles, he always jokes around and say to his clients say, like, I don't want more money. Yeah, it's okay. It's
true.
Because of the credit that you're able to get them.
True. Also, one thing too is that my contact information will be below also to reach out to me as well, and he'll add that. But yeah, I'm laughing because I've had too many clients that say, "Oh, don't you want $1 million?" Like, Charles, you got us so much already. We don't want any more. And then I'm like, oh. And I feel defeated because it's like, I just want to help get you more. And they're like,
I
no,
can get you more.
because I can. And it's like,
Yeah.
no, we don't want any more. We're fine. We're fine. Oh my God.
So
Okay.
I think we're gonna wrap it up here, Charles. Guys, thank you so much. I hope you guys again took notes. I'm gonna have Charles' email address on the description, and so you
Where we're
can
doing our
reach out to
website,
him.
where we're doing the website. So email, then I'll give you my personal Instagram site. You can go there as well for messages. But hopefully you should have a website done with the next week or so.
Fantastic, awesome. So Charles, again, thank you so much, man. I appreciate you, guys. Thank you so much for watching, and I'll see you soon in the next video.
Thank you.